Henry saying that because he wasn't asked for a vote, something that's going to determine whether or not American people, Democrats and Republicans, will suffer if we don't raise this debt ceiling. And I've been here for 22 years, between whether it's Democratic or Republican administrations. And each time, when it came to the credit of the United States in our economy, it didn't make a difference to me whether or not the administration was Democratic or Republican, or whether or not someone called me to ask me for my vote. I'm here to try to do the best thing for the American people, not play politics. And when it comes to the credit for the United States and the economy moving on, it's not about who's the president or who called and asked me for a vote. It's about doing the right thing for the American people, Democrats and Republicans, and moving up this debt to making sure that we don't default on our debts is essential to that. And it's essential to our responsibility as members of Congress, and not to say, oh, nobody called me for a vote. That's simply not our responsibility. Now, Madam Secretary, there are consequences if we don't pass and increase the debt ceiling. I mean, like the increase in the cost of borrowing for a home or a car or through one's credit cards, of which folks will say on the other side, I don't have to deal with that, but then it's going to be, play politics with it. So I was wondering, as we are recovering from this economy, what setbacks will a default on debt cost American households, be they Democratic, Republican, independent, non-voters? What cost would it cost us?
Well, I think it would be catastrophic for the economy and for individual families. Nearly 50 million seniors could stop receiving Social Security payments or see them delayed. Our troops would not know when they would get their next paycheck. We have 30 million families who rely on the monthly child tax credit, and they would not receive that relief, at least on time. And as we saw in 2011, when the debt ceiling was raised at the absolute last minute, and investor and consumer confidence was shaken in the run-up, we saw a marked increase in interest rates, a marked drop in the stock market. And when U.S. interest rates go up and the credit rating of the United States was downgraded, that means higher interest payments for everyone who has a loan, whether it's a small business, a homeowner with a mortgage, a credit card payment. Anyone who borrows would see higher interest costs of their debt.
We must raise the debt ceiling for the benefit of the American people. I don't care what party they're from. Let me go to Chairman Powell. Now, the Fed is rightfully focused on controlling inflation while boosting employment with the aim of guiding our economy back to its pre-pandemic normal. And at the European Central Forum, you mentioned that it's urgent for the Fed to resolve the tension between these two policy goals, since taming prices by raising interest rates would weaken our labor market. As the Fed considers its monetary policy, how will you manage the trade-offs between controlling prices and ensuring full employment? And how do you plan to resolve the tension between the two that you spoke on Wednesday?
That's the very difficult situation we find ourselves in. Almost all of the time, inflation is low when unemployment is high, and so interest rates work on both problems now. So right now we're far away from, we think, away from full employment. So that gives us an incentive to keep accommodative policy strong, to keep accommodative policy in place. Inflation is well above target, and we have an expectation that high inflation will abate because we think the factors that are causing it are temporary and tied to the pandemic and the reopening of the economy. And what we say is we just have to balance the two. But I would say our expectation is that inflation will come down, and we won't ultimately face that difficult trade-off of having the two goals in tension.